Constellation Brands is an international producer and marketer of beer, wine, and spirits. Let's move on to the company's financial indicators. It can be seen that the overall revenue is constantly increasing. However, assets have recently had a downward trend, while the company's debts have been growing slightly. The downside is that the company does not have a consistent net profit trend. However, before I evaluate the company, subscribe to my channel to not miss future videos. I rate the company 4 out of 10 because I initially considered the business as a stock rather than a business itself. Although overall revenues have always increased, after 2019, the company stopped counting funds because net profit is negative, with a slight positive trend. If the company invested these funds in developing its business, it is good for the company. However, if we look at the debts, they have also increased, and the company has almost no cash on hand. In the current economic situation and with its unstable revenues, this is a mandatory factor because companies need to cover losses and pay dividends to shareholders, and if the company fails to do so, it will need to take on new debt or sell assets, which the company does both. If we look at shareholders' equity, shareholders are gradually losing assets, but despite all this, the company's shares continue to grow. Today, you can buy a share for approximately $250, and I believe the company is slightly overvalued. It has potential, but it also has enough risks because the company's management has stopped counting funds, and if they make one wrong move, it can negatively affect the business. If we look at competitors, for example, Brown-Forman, I like this company better because the income situation is similar, but the data on net profits are more stable, indicating the profitability of brands and a high margin. Besides, being twice smaller in capitalization, it has more than 3 times the cash in the account. And if we look at the assets of shareholders, they are constantly growing. Taking into account the size of the company, their current net profits are almost equal, but the PE ratio in Brown-Forman is more attractive because if we take the latest data and make similar calculations, we will see that Constellation Brands, with a capitalization of almost $46 billion and approximately $16 billion in debt, gives us a price of $61 billion when the company has $25.5 billion in assets. This means that we are overpaying for the business by $36 billion. The company has $1.7 billion in net profit, which means that it will take us 21 years to return what we overpaid for this business. If we do a similar calculation with Brown-Forman, this indicator will be 17. Therefore, although Constellation Brands is not a bad business, you can buy a business that is not worse but is traded cheaper on the market than its competitors, and for shareholders like me, this is an important factor, so I will not buy shares of this company.